I think if I look at the headlines, you mentioned them, revenue down 29%, but we think we're through the bottom. So June was less worse, let's say. I wouldn't say better, but less worse than April and May. Orders down 15% at 931. So that's a book-to-bill ratio of 1.2. So we're ready for the bounce. Call it that. Cash flow very positive, at 129. So we're financed through. The effect of COVID and the oil price hit us hard in the North Sea. Revenues there are about down by 50%. In the US, down by about 40%. Middle East, down by 25%. And the rest of Europe in the range of 10 to 20%. So very mixed picture across the board.
Just focusing on the oil and gas business specifically, are you seeing a structural shift at all in the likely order outlook, just as we see some of these big oil companies make their big announcements about how they're going to pivot away to renewable?
It's a very mixed picture. I mean, our maintenance business, call it our base business, is about 70% of our revenue makeup. That continues. What we have seen is that projects have been either delayed or cancelled. And of course, in the North Sea, on the UK side, a lot of the operators are selling out to the smaller companies, moving to other territories or not moving anywhere at all. On the Norwegian side, Equinor continues, but with a focus on powering their offshore platforms from the land side, so trying to reduce their carbon footprint. Some investment in floating windmills. In the US, very little change. In the Middle East, we do see a lot of companies looking at hydrogen projects, and again, trying to use that to balance their CO2 footprint.
And you flagged up the Hinkley Point project in the announcement here. Could you just tell us a little bit more about what you're expecting around that project and the contracts?
Sure. We've signed contracts for a little over 500 million euros, that is. We've called off, or the customer have called off about 140 of those, 140 million. We expect another 150 million this year, 250 million next year. That hasn't yet hit the order intake line, because only when they're called off do we actually record them. But again, it puts us in a good position, and that's why I said with a book-to-bill ratio of 1.2, we're ready for that bounce. We think we'll begin to recover throughout the rest of the year, and we won't be quite at 2019 levels in 2021. We'll be a little bit short, but definitely an upswing.
Yeah, we talked a little bit, I think, about the impact of COVID. Maybe we can just spend a bit more time, particularly where it affects your international operations in the United States. Could you share with us what further challenges you anticipate, particularly in Texas, as a result of the ongoing flare-up in cases in that part of the world?
Mm-hmm. Again, a very mixed picture around the world. I think it's forced us to review our structure around our organization. Compared to last year, so the same quarter last year, we had about 37,500 people. We're 6,000 people less at this moment in time. A lot of those have been redundancies in the US, where there doesn't exist any furlough. In Europe, it's a mix between redundancy and furlough, so we're able to balance what we do. In the US, our Texas office remains closed, so people working from home, working remotely, through video and Teams. On site, however, business does continue. A lot of what we do is critical to business to industry, and therefore learning to work inside of the COVID restrictions has been part of the learning curve. But I think we've come through that. I think all of our customers have COVID protocols, and I think if you look at Bilfinger, we have an excellent track record in safety. Our people are disciplined, able to adapt, and I think that makes us a good partner for customers, particularly in these times.